I'd like to come and to something that you've really done and changed a lot. Is since February 2025, the RBI has cut the policy rate by 125 basis points. It is now, points to 5.25%. That's the rate right now. This is striking because the last comparable easing happened, I think, in the cycle in 2019 or so, and that was a bit sharply slowing growth. This time rates have been cut despite GDP growth. So what changed in the RBI's assessment? And do you see this as the start of another process? Will we continue to see rate cuts, or this is it and you'll now stabilize?
So if you compare, with the last time that we brought down the rates as low as 5.25%, and then, it went down even further to 4%, we were in a very different situation. It was exactly the reverse, in fact, because the growth was low and inflation was high.
Yeah, right.
And it was increasing. Headline, next year was more than 4%, about 4.8% in 2021, So we were heading into higher inflation, lower growth. This time around, we are having good growth, and we are having, very benign inflation. So it's primarily because of the benign inflation. Last time, it was low growth, which needed to be supported. Now, the real interest rates, as I was mentioning to you, real interest rates, especially, because core X gold is quite low. Right. It's less than, it's about going forward, because monetary policy actually works forward-looking, it's forward-looking. And so the outlook is very benign, 3.5% or so. And so real rates need to be a little lower. And so that's why, we reduced our policy repo rate by 25 basis points. Going forward, monetary policy is not, preset. It evolves. We are data dependent. We are in a neutral phase. It's for the MPC actually, to decide and see what the data points to and what we should be doing from policy to policy. However, as I mentioned, I do feel that inflation should remain benign for a longish period of time. And if that is going to remain, barring, shocks on the supply side, could be weather, could be geopolitics, could be something else, then we are in for a long period of low policy rates.
Just to add to that, quick follow-up question. Your intention when you did this, what do you think will be the impact on the economy? What do you hope to really stimulate by this particular rate cut, or the series of rate cuts that you've done?
Yeah, so primarily the monetary policy functions to the demand side.
Right.
And so the objective really is to spur demand. And you can see that now happening. Your consumption expenditure is good growth, we had in the last 2-3 quarters. There is good credit growth, offtake, especially in MSMEs, all across all sectors, but especially in, personal loans, home loans, MSME loans. Why I say these loans? Because these are directly linked, to the external benchmark rates, and the monetary policy transmission happens quicker than for other sectors. So it should further spur demand in the economy, which should help our growth and jobs and the real economy on the whole.
Sorry.
If you like the video, do like, comment, share and subscribe.